Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We have actually, you know what? I think I say this every single time. We have a boring Friday today. Normally, I say we have a bunch of exciting news. To be honest, today's just not one of those days. There's not a lot going on. Everything is in the green for the most part. In fact, it's so in the green, I was going to wait until market closed and I couldn't do it. I was like, I just got to do it now. I'm too excited. I got some of my favorite things I get to talk about today. I'm really excited to go over some stuff. I'm going to nerd out with you guys. And if you're a millennial listening to this, especially a millennial boy, not that girls can't play video games too, but every single millennial boy remembers Halo. And we're going to talk about Halo today because there are some major connections between the world's biggest stock right now, Nvidia, and Halo, that I wish if I could have gone back in time, if I had a time machine, other than to go meet Jesus himself, the number one time I would go to is 2001, December 8th, when Halo originally came out, and I would tell my father, listen to me, put all of your money into Nvidia. Put all of it into it. Okay, you see this video game. Okay, you see what it's doing. Do you see how it's changing the game? If everybody remembers this, video games before Halo, it was like I was like Mortal Kombat and NBA Jam and Pokemon Stadium. Like these were the level of graphics, if you guys remember those video games, and they were good. They were excellent. And then Halo came out and you were like, what is this? Like, what is this world? This is amazing. It was spectacular. And we're going to talk about that in a second. But first, we got to go over our term of the day because it's also important. And today is market cap. Okay, so market cap, anytime you hear that, you'll hear that term thrown around on like CNBC or pretty much anybody who's talking about a company, especially an overvalued company. Market cap is just their total value. Okay, so it's described as market cap or market capitalization is a company's total value calculated by multiplying the price per share of its stock by the number of shares outstanding. It's a key indicator of a company's financial strength and can help investors and analysts gauge company size, public interest, and risk. Okay, so first couple of things in that, it's not really... Actually, it is. I was going to say it's not really a good tool for analysts to use. It's a tool, I would say. It's just a tool, but we're talking about that today because we're going to talk about Nvidia's market cap. And you'll hear later when we start talking about it why market cap isn't as important as people think it is, at least from my perspective, and why it's a valuable like placement tool. Like you can sort of place a company 1 through 10 with market cap information. Now, I would tell you to be really careful about predicting with market cap, which a lot of people do, and we'll go over that. But anyways, market cap, it's just what a company's worth. It's their total value, okay? All right, let's get into the news real quick. So let's see, where is my notes? Here they are. Okay. Stocks were higher Friday afternoon, adding to solid gains for the week that have helped major indices recover most of the losses that were recorded during an earlier month sell-off. The S&P 500 and NASDAQ Composite were up 0.6% and 0.7%, while the Dow Jones added 0.8%. The S&P and NASDAQ are riding 4-day winning streaks. Let's go, baby. Boosted by solid gains for technology stocks and expectations that the Federal Reserve will start cutting interest rates next week. Large cap technology stocks were mostly higher Friday. AI investor favored Nvidia, Microsoft, Apple, Alphabet, Amazon, and Broadcom all gained ground, while Meta, Facebook, was down slightly. Among noteworthy movers Friday, shares of Boeing were down 4% after the aircraft manufacturer's machinists overwhelmingly voted against a new contract and went on strike. Shares of Adobe fell 9% after the software maker issued a disappointing sales outlook, while Oracle gained 2% as the company boosted its sales guidance. The economic data calendar is light on Friday after a few busy days of indicators that investors watched closely as they look for details that could affect the Fed's decision on interest rates. The Fed is widely expected to cut its benchmark rate next Wednesday for the first time in 4 years as inflation continues to moderate and the labor market weakens. While Fed officials have made clear that rate cuts are coming, it's not clear how big those rate cuts will be. Market participants are now pricing in about a 45% chance that the Fed will cut the benchmark rate by half a percentage point next week, according to CME's Group's FedWatch tool, which forecasts rates movement based on Fed fund futures trading data. That's a mouthful. That percentage, 45%, is up from 30% yesterday and 15% on Wednesday. While investors have been clamoring for rate cuts, the Fed normally doesn't adjust rates by more than a quarter point at a time. A larger cut than that, some analysts say, could send a signal that the Fed sees the possibility of significant deterioration in the economy. The yield on the 10-year treasuries, which is closely correlated to expectations around interest rates, fell to 3.65 from 3.68 yesterday. Gold futures were up 1% to fresh record highs, around $2,610 an ounce, while Bitcoin was up more than 2% to just under 60,000. Real quick on that, Bitcoin has hovered around 60,000 for the longest time. I just needed to do something. Just break or fall. Break or fall, please. Bitcoin is one of those things where we're not allowed to recommend unregulated securities, which Bitcoin is, but it's still something we like to track. It's an investment. It's the millennials' gold. So it's definitely important to us as a firm we're millennials, right? So we work with people who love the crypto space. In fact, speaking of that, we have a client, millions of dollars in crypto, and they made a trade. I think they have like $5 million in crypto, and they made a trade with $200,000 gain. You can do the math on $5 million. Okay, $200,000 on $5 million is not very much. And they're living in that crypto space with $5 million. That is the riskiest thing I've ever seen, when you could easily get more than 5% guaranteed safe in treasuries. Again, we compare everything to the treasury rate because it's the most secure guaranteed thing there is. Okay, let's talk about, I've got 8 minutes. Okay, let me just read this about NVIDIA and then we'll talk about Halo, okay? So NVIDIA stock was on track Friday to notch one of its best weeks of the year and recover most of its losses from previous weeks as investors heeded analysts' recommendations and bought the dip. NVIDIA shares were little changed midday Friday, putting the stock up nearly 16% for the week in its second massive rebound in a volatile month for the chipmaker stock. Okay, now we get to talk about Halo, which is obviously why everybody's here. Let's talk about the best video game that was ever created. And obviously that is up for debate, but I just mean as far as it was revolutionary. Okay, so Halo came out December 8th, 2001. Okay, NVIDIA, I think they're a 1993 company, but they IPO'd in 99. Okay, or was it 97? Either way, it was late 90s. Let me tell you something. Okay, I think they IPO'd for $12. If you had bought 100 shares, so what is that, $1,200 of NVIDIA, you'd have 48,000 shares of NVIDIA right now. Okay, and they've gone through 6 or 7 stock splits. So let's do that. 48,000 times, what are they at, 130 right now? 118. You'd have $5,664,000. I'm laughing at that because that kills me. It kills me. I said this already. If I could go back into time and I had 2 choices, I'd pick Jesus and I'd pick Halo. And the reason I'd pick both those times is because even as a 9-year-old boy, I think I could have convinced my parents to put $1,200 into NVIDIA. Okay, NVIDIA. I found this maybe like, I don't know, 25 minutes ago when I was doing my research, and I don't have the link for you guys, but if you type in 2000 Halo NVIDIA commercial, okay, you'll have a commercial from NVIDIA about their GPUs, okay, because Halo and NVIDIA worked together. NVIDIA was instrumental in Halo being an excellent video game. And if you remember, if you're a millennial, boy or girl, and you played Halo, you remember that feeling that game gave you. I know you do. It's nostalgic. It's powerful. And your 8, 9, 10, 11, 12-year-old self also would have told your parents, please, every birthday I have till I'm 18, just put $100 into this stock. And you guys would be millionaires. And the reason I wanted to talk about this, or what it has to do with market cap also, is because there's this air around NVIDIA that their market cap is way too high. Okay, they're like, oh, there's never been a company with 3 trillion market cap. It's too much. That is the stupidest thing I can say. And I'm going to use strong language here, even though I'm not Warren Buffett or Charlie Munger or Peter Lynch, any of these famous investors. Market cap, I promise you, does not mean anything for trailblazing stocks, trailblazing companies. And I've had we work with physicians and doctors. A lot of them will bring up, well, the market cap's too high. It can't keep going up. What do you mean it can't keep going up? That's like saying this is the world's biggest wildfire. Like, how could it keep burning things? It's like, what? We've never seen a wildfire this big. If there's things to burn, the wildfire can keep going. The fire can keep growing. And it's the same thing with this. Demand for this company is not going away. It's going up. It's increasing. There's more demand for it. And the another way you can tell that this company is gonna keep going is because the smaller chip making, the smaller AI companies, they're riding a wave. So although NVIDIA is this giant wave, right? And there's, smaller companies are surfing on the wave keeps getting bigger and it's rising these surfers up, rising these other companies up with it. Okay. It does not matter if they break new market cap, right? If they break the ceiling, the glass ceiling on that, someone's going to do it. The world keeps getting bigger. More money keeps getting in fluctuation. That doesn't go away. So that eventually will happen no matter what. And with the demand of this, every company wants AI. I can't think of a single company, well, I don't want to use the word real company, but like a company that is seeking growth. Okay. Ultimately, a whole company's purpose is to make the owner money. That is really the original ultimate decider of a company growing, is that it increases its revenue. And there's obviously a bunch of stipulations you can say about that. But when somebody starts a company, they want it to be as efficient as possible. How efficiently can you make money? How efficiently can you produce products, services, etc.? AI helps with almost virtually every single company in doing that. Okay, so that's the number one thing why market cap doesn't really exist with this, is because everybody could benefit from it. Second is because all these other smaller companies are riding the wave. So those are my two evidence-based thoughts on why it doesn't matter. But I know you guys remember Halo. I know you do. And I can't tell what the stock price was exactly back in the day because there was so many stock splits. Like there was a 2-for-1 stock split in June 2000, a 2-for-1 again in September. And it says the stock price was like 50 cents or something, 20 cents, 30 cents. So, which might be true. I can't validate that without doing a bunch of math. And honestly, it's Friday. Don't make me do math, guys, please. But what I'm trying to say is that this company started in 1993. There was evidence, big evidence. Halo is big evidence. I know you remember those feelings, that nostalgia feeling. Big evidence in 2001. And then there was more evidence because the games kept getting better. And guess what chips and GPUs people were using? NVIDIA's. Okay, that's who they were using. And we had evidence this whole time. And I know I was, 9, 10, and I'm making fun of like, hey, I really wish I would have gone back and done that. But I mean that. When we think about stocks, there's evidence all around us. Now, I wouldn't have said, hey, put all your money, Dad. Put all your hard-earned money into this chip-making stock, this AI tech stock. But I just showed you that if you would have put $1,200 in, you'd have over $5.5 million right now. But again, that takes time. It takes time. 2001 to now, what is that, 24, 23 years? You would have had to have waited. And it's crazy to think about that. It's crazy to think about how much time you actually need because everything is immediate gratification for us. But there are plenty of stocks right now, plenty of companies. We're following them in our newsletter where I'm not saying they're going to be NVIDIA. No, if anybody tells you they know the next NVIDIA, they're lying to you. No one really knows. But these are the companies that we're seeing like, okay, these are holders. These are bag holders. In the industry, Peter Lynch coined it, they're 10 baggers. They're going to 10X. Okay, these are the stocks we're trying to find and we're trying to watch. Now, obviously, picking individual stocks, extremely risky, not always the case. And if you don't have the 10, 20, 30 years to wait, do not do it. Just do an index fund. Okay, you don't need to pay somebody a percentage fee to do an index fund. Go to Vanguard and just open up the account. At least start investing. At least start. Now, obviously, that's not the most capitalistic advice. If I was really out here trying to get people, I'd be like, come work with us. Pay us the 1.25% fee. Pay us the 1% fee to manage your account. But it's more important to me that you just start it. Okay, that you just start. We're going to be fine. There are people who are going to want to work with us. And if that's you, we're happy to help you. We love this, right? You guys hear probably how excited I am about Halo right now. And Halo was evidence for a really good stock. It was evidence. And that's the type of stuff that I'm looking for. As the investment executive, I'm looking for those things. Like, where is the Halo evidence? And it's going to be hard. It's hard to find. And again, equities, very, very risky. At the most, like, so right now, what do I have? Maybe 30% of our firms, all of our clients' accounts, 30% is individual equities. Okay, 70% is mostly either fixed income or indexes. Okay, and the reason for that is because we're not looking for, we're not looking for a home run right now. We're looking to get on base constantly. How do we get on base? How do we get on base? Okay, have you ever seen Moneyball? Getting on base is how you win games. Bases and runs, that's how you win the game. So yeah, check out our newsletter where we give in-depth explanatory reasons why we like watching certain stocks. We also go over market news. And then we, once a week, we go over, me and Brandon, my partner, he's a CPA. We go over like general, I don't even know tax and investment advice. So it would be how to use your small business, how to utilize a 401k to maximize wealth, et cetera, et cetera. Why saving on taxes with a personalized CPA or working with a CPA will save you money. All those types of things. And I'm running over my time here, but I would tell you, please, 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 please look for the Halo evidence or work with someone who's going to find the Halo evidence for you. Okay. Find somebody who's going to work with the Halo evidence. And I gotta peel myself back here because I did say you don't have to pay, you don't have to hire someone like me, but if you wanted to, on average, Vanguard did a study, hiring an advisor gives you about 3% more return a year than doing it yourself. And that was a study they did, I don't know, a couple years ago. So it's probably even more now, to be entirely honest. But guys, look, that is it for today. Look for the evidence. And remember, market cap doesn't necessarily mean anything. You can use it to place a company, right? You can say, NVIDIA's at 3 trillion market cap or 2.9 trillion market cap. Well, now it's in the top 5 companies all time of market cap. You can do something like that and say, well, how much higher can it really go? But then you've got to look at every other company that's riding the wave. Okay? I think that's another piece of evidence that rides it up. All right, guys, that is it. As always, invest early, invest often. We'll see you next week.